Welcome to Subramani. In the gym locker rooms, you see young boys, maybe 14, 15, playing something called Dream 11, which is I would think, a gambling option in the Indian context, right? So, Rummy is something which people play, which they give you a warning saying it can be addicting, but then people don't see it. Every day I'm inundated with WhatsApp messages and SMS saying Dream 11, this is happening, Rummy, this is happening. And I have not even visited those websites, right? And I know kids playing this game because they say, sir, it's only 39, it's only 49, and these are kids who are not even earning money. Right, obviously they are in school, not even in college, and they come to the place where I see them is the gym, where they come to play cricket, and in the locker room this is the discussion. Oh, yesterday I lost 49 rupees, I lost 59 rupees, I actually gained 102. If this had happened, I would have got 1 lakh, right? This kind of stuff. If that is disturbing for you, I think I wrote some piece on how technology is helping dabbling in the markets, not investing in the markets, right? It's very easy today to check your portfolio, then you say, oh, this is happening, so I should buy this share. So it's so quick. All you have to do is be online. Wherever you're sitting in your office, you're sitting waiting to meet somebody, you're sitting in the airport, it doesn't really matter, you can do a trade, right? Doing a trade has become very easy. Now, that because trading has become very easy, does it make investment has become very easy? Answer is no. If you look at some of the data, the number of investors which the Indian brokerage industry has added from say 2000 to 2022-23 must be much more than the numbers added over the last 10 years prior to 2020. The pandemic opened up the box and just too many people are now trading, which is good. But as a regulator and as a person in the market, we have to make it very clear that there is something called trading and something called investing. Investing has not become easier for people because there is too much temptation to review your portfolio on an hourly, weekly, monthly, daily basis, whatever, and then take some action on it. Oh, this is happening. Oh, what happens if BJP doesn't come back? Should I sell Patanjali? Look, you still wait, right? You don't know what is going to happen. There is no hurry to act, but then people are acting in such a hurry. People are doing so many trades, and our great media regulator, people like this YouTube channel, find it almost impossible to distinguish between a trader and an investor. A lot of trades which have gone wrong become investments. So if this kind of numbers are being added, and if this kind of FOMO is there, oh my god, he is doing it, so I should do it, the number of people playing Rummy or in Dream level should be about 10 crores, which is 2.5 times that of the number of people holding mutual funds. Is there a solution to it? Am I looking for a solution? I'm not looking for a solution. I'm just giving you the facts, and I have some more facts. So in the US, 44% of investors use mobile apps to place trades, which was up 30% in 2000, up from 30% in 2018, and it is likely that in 2023 the number is something like 57%, 58%. I think it would be higher in India because India has added many more people in the last 3 years or 4 years than we would have added in the last 15 years. So more and more youngsters coming into the market means more and more of trades and perhaps even mutual fund investments happening through apps rather than through calling a person or going online on a website and investing, right? So some of these things are really worth noting. And obviously a substantial, the American study says a substantial new investors entered the market in the recent years based on platforms like TikTok and Instagram. This is very true. You see something on TikTok, you see something on Instagram, some 22-year-old saying, oh, I did this and this is the strategy that I used, and then people are falling for it, and people saying, I have 13 years experience of trading in the markets. 13 years experience means nothing. That person has not seen a bear market at all. right? If you've seen a 2-month, 3-month fall, that is not a bear market. A bear market is a longish bear market. Talking of 2-3 years of bearishness in the market, that is a bear market. That we have, none of the people who have entered the market after 2003 have not seen it, which means you can have 21 years experience in the Indian markets and not have seen a bear market, longish bear market, right? But the thing is, in 2022, some of them must have had some losses, must have taken a hit, and that was a time when they may have struggled, but they may have got back, and you never know whether they. I know of kids who have blown their parents' money. I know of husbands who have blown their wives' money. I know of senior citizen. I wouldn't say senior citizen. I wouldn't have talk of 45, 50-year-olds blowing their parents' money. All these kind of combinations, when people have access to your wealth, they do tend to blow it, and they do it, right? So interest in trading is obviously going to be more when the markets are going up. You see, whenever you see a portfolio, it goes up by 1 rupee, 2 rupees, 10 rupees, whatever it is, there's a great excitement. So you think, wow, this is great, this is easy. Why should I be holding my job? Can I do this full time? These are all questions which have crossed all of our minds. I have known chartered accountants who have given up their practice. I know doctors who are change the timing of their practice to suit to make sure that 9:30 to 3:30 the maximum time they can find in the market, right? So which means they come home at say 12 o'clock and don't go back to their practice till 4 o'clock or 3:45 or whatever, right? So till 3:30 they have to do that, or they're already sitting in their practice at 3:30 attending to the patients, but also doing some trades on the side, right? All these combinations I have seen, and I have nothing against these things. Only thing is, when the markets don't do well, how will these people react to the market, right? So will you get bored because the market is slowed down? It has slowed down. Will you panic and sell because the markets are down? Those are the things that one has to think of. More people get invested in stock market because it seems to be a sure thing of making money, right? So that is also one of the facts. A lot of trading apps focus on competitiveness, winning, making money, and short-term views, right? Everybody's got a short-term view. Sir, you bought Larsen and Toubro for 3,800. Now it is 3,900. Why don't you sell it off? Because the brokerage rates are low, or it is zero brokerage. So you think you're making 100 rupees minus transaction costs. So is it worthwhile taking risks and doing it? How many shares did you buy? Maybe 5 shares. How much money are you making? 100. How much is that? 500 rupees minus brokerage, STT, whatever, all those taxes. So will you really make too much money? It's your call, right? But yeah, a lot of transactions are happening, and I hope more women take to investing, because women look at goals. Women look at, oh, for my child's education I need money. I need money to buy some jewelry, or I need to plan for my retirement, whatever it is. A woman's way of thinking is, at least they think slightly longer term than the men do. For men, trading is great fun, so they do it. And then some of them get their wives and daughters and all also addicted to it. So don't listen to your husband, don't listen to your father, mother, whoever is trading. Be careful about whatever they are saying. What are the disadvantages of high risk investing? You don't even realize that you are not investing, you are only trading. It is high risk, you are losing money. When you lose money, you pay from your pocket, and if your whole portfolio is a trading portfolio, then you could be in a big mess. So if you want to trade, have 2 accounts, one brokerage account where you will invest and one brokerage account where you will trade, and make sure that the balance in that account with all the shares, everything put together, is not more than 2, 3, maybe 5% of your portfolio. So if your portfolio is 1 crore of rupees, including all the mutual funds and investments you have made, 5 lakhs should be in this brokerage account. Whichever brokerage account suits you. Have one for investing and one for broking, 2 separate accounts, so that you know that, okay, up to 5 lakhs is what I can lose. Once I lose that money, I will not allocate fresh money to that. or say 5 lakhs is what I've what I've earmarked for trading. The minute it comes to 4 lakhs, I'll have it reviewed by somebody as to what I'm doing wrong, etc. At 2.5 lakhs, it will be a very strong alarm bell, and I will not do anything for 2 months, and then I will come back to it. Some of this discipline, if you don't put on yourself, very good chance that you can blow your money, your parents' money, your spouse's money, your kids' money, whichever you are dealing with. And I know 80 plus year olds, which means 85, 86 year olds, who are being pulled by their relationship managers to do more trades, to lose money in FnO. It's not uncommon, right? I don't want to name the brokerage firm, because when I name one brokerage firm, the other brokerage firms think that they are geniuses and they don't do these things. All of them do it, make no mistake, right? You may have heard big names, big brands, they also do it. So PSU, they also do it. The thing is, it's going to be hard when the market is doing nothing. When the market is doing nothing and your portfolio is doing nothing, there will be greater temptation to play the market. Let me buy this, let me go short on this, etc., etc. Right? So you have to be careful. To build healthy investing habits, you have to start saving per month, then investing it. You have to be more careful. Maybe you do an SIP, you watch your portfolio grow and say, okay, I had put 5 lakhs because that was 5% of my portfolio. That 5 lakhs has now become 4 lakhs. So I will trade more, trade less, whatever. Put rules for yourself, saying that if my portfolio, which is the trading portfolio, has come down from 5 lakhs to 4 lakhs, I'll take a 1 week sabbatical. I'll do nothing. Maybe I'll go learn, read, see how my regular portfolio is doing. Has that gone from 95 lakhs to 97 lakhs or whatever, some condition. If there is nothing exciting happening in the market, you cannot induce excitement with your own trading. This is something very basic. So, sorry, if your share, let's say you picked up HDFC Bank or you picked up Asian Paints and that has done nothing for the last 3 years, you cannot induce excitement because you want excitement, right? Market does not give you excitement. So, if the investing is fun, it can be fun. It doesn't mean you should make it fun and lose money there, right? So don't try to make fun in the market, or don't try to create fun in the market when there is no fun. If the market is doing nothing, or if your shares are doing nothing, you can't do anything. You cannot induce volatility into it and trade in that, saying, oh, this is good fun. Or in the reverse, look for shares where there is excitement, good chance that you will lose money. So be careful about what you're doing while investing. Build good healthy investing habits. Make sure that you have some kind of a discipline, you have some kind of a satsang where you sit and talk about what you're doing. Only if you do all that can you become a good investor. Just opening the portfolio and seeing it on an hourly basis or half-hourly basis does not make you a good investor. It does not even mean you're monitoring your portfolio. You can monitor your portfolio by looking at it once a month. You don't have to look at it once every week or every day. In fact, I have not seen my portfolio in 10 days or maybe 20 days. Thank you.